If you are a newbie, you're a beginner to the world of trading, and you're using a line chart, please, please stop.
Stop it. Get some help.
Now, I do want to give you some credit because at least you're paying attention to what I call the king indicator, and depending on where you're at in your journey, I can assure you at some point, if you have not yet already, you're going to come across discussions of, oh, well, this indicator is the best. Oh, I use this indicator. And oh, I discovered a new indicator. And that's fine. I don't have anything against indicators per se, but just realize that the king indicator is the price itself. So first off, let's just establish what a line chart is. And then, so kind of some of you are like, well, I don't know what a line chart is, but I definitely don't want to use it. Good. I like that thought process. But then for some of you that are already using line charts, let me give you a way better solution. Now, don't overthink this, but a line chart is actually a line. So right there, we have our line. Now that brings about the question, okay, what is this line actually telling us? And again, going back to that king indicator, all it's telling us is what the price is doing. So as of right now, this price is right there. And that's all it's tracking. It's tracking and telling you where the price is at and what the current price is and where it's located. So right there, like I said, that is the current price of this asset. And this applies to whatever you're trading. So what you just saw there, that was Bitcoin, but that could have been a stock, that could have been a futures, that could have been anything. So, you know, what the asset class is irregardless. A line chart is just simply a line that's telling you where the price currently is at. And I don't want to insult your intelligence, but hopefully we can all see that right there, that is just simply one data point. It's literally just simply telling us where's the price currently at. And I would argue that the more data points you can give yourself in a simplistic way, the better trade plans you can put together. And the better trade plans you can put together, the higher likelihood that you have of making money, which I'm assuming is your goal. And the cool thing here is that by clicking one button on this platform, I'm going to change the chart and then go from one data point to 6 data points.
Nice.
And if you are wondering, this is Webull as a platform. These are totally free charts. If you're liking what you see, I'll put a link down below. But all we're going to do is come up here and click on candle. And you notice things have changed. And this is what is known as a candlestick chart. The first key question when it comes to candlestick analysis, and this is going to be very basic because my goal here is just to get you to stop using line charts or to just avoid them in the first place. So yes, there's more that goes into candlestick analysis, but I just want to give you the ultimate basics so you can see just how much power, how much data is being conveyed in what I think is a very clever way. So like I said, the first question that we need to ask ourselves in candlestick analysis is, what color is the candle? I know, very complicated. Is it red or is it green? So let's take a look at that candlestick right there. And that is green. So what is that telling us? Well, if it is green, then we have this box part. This is called the body, but let's just call it a box. So this bottom part of the box right here, that is where the price opened. Opened relative to what? Well, because we're on a 5-minute time frame, this is a 5-minute slice of time. So during this 5-minute slice of time, that 5 minutes started at second number 1, the price was right there. That is where it opened up at. And then when this 5-minute slice of time was over, up there at the top of the box right here, that is where the price closed. That's where the price ended up. So we have the open and the close. Now we have a couple other lines and bits of data. And the other one is the bottom portion down here. This is known as a lower shadow, lower wick. What is that telling us? Well, that's telling us that again, over this 5-minute slice of time, that the lowest the price got was down there. So that is the low of this 5-minute slice of time. And then up here, we have another little, this would be known as the upper wick, the upper shadow. And right there, there's another little top of the line, and that is the high. That is as high as the price got during that 5-minute period of time. So hopefully you're seeing now how, wow, instead of just one data point of where the price is currently at, we're now knowing how low did the price get? How high did the price get? Where did the price start during this 5-minute slice of time? Where did the price eventually end? Or where did the price close during this 5-minute period of time? And then we have another really helpful bit of data. And that is just simply the range. When you stop and consider that at one point the price was all the way down here, and then it eventually went and closed all the way up there, you can see here, this distance right there, that's telling you the price in of itself, that made a pretty good jump over this 5-minute slice of time. Now the second question, or excuse me, what happens if you answer that first question? Okay, well, it was a red candle. So now let's take a look at this candle right there. So if it's red, that means the price went down. So, and we're still on the 5-minute time frame. So we're still talking in 5-minute slices. But during this 5-minute slice, the price started off right there. Or in other words, that was the open. That's where the price started. Remember, with a green candle, the open would be down at the bottom of the box. But now with a red candle, we are at the top of the box. So right here, this is the open. And then down here, the bottom of the box, that is where the price finished. Or in other words, that is where the price closed. And then when it comes to the high and the low, those are the same. Doesn't matter the color of the candle. So right there, the lower shadow of that line right there, that is the low during that 5-minute period. And then up here, actually my platform's telling us what it is, but the high up there, upper part of that is just the high. How high did it go during that 5-minute? That's where it is up at that point right there. And then again, that other data point, check out the range. So what is this telling us? At one point, the price was up here. Now think about it. Then the price went all the way up there. But my question here, and this is going to be an insight into how well you're already comprehending Candlestick, is, well, where did this thing close? If you're saying, well, okay, so it's red, so that means the close is down here. Correct. But think about the story. So that is telling us that at one point during this 5-minute slice, the price was all the way up here. However, by the time this 5-minute slice was finished, the price had fallen all the way down there. Which hopefully you're saying, oh, that's pretty rough. For the price to have been all the way up here, but then it ended up all the way down here, yeah, that looks pretty shaky. And I fully agree, that would be totally shaky. Think about this one real quick. This candlestick right here opened up right here, then it dropped all the way down there. So at one point the price was there, but look where it ultimately closed. It got up to that area right there. So that little upwards movement right there, that's good information in and of itself in terms of good strength. And then just to bring it over, you can see right now that, and this is what it looks like in real time as a candlestick forms. So we have our 5-minute period, and right here, this thing. So you can see right now it's gone to red. And as more time goes by, this will, continue to form. But that's what a candlestick looks like in the heat of the moment in terms of as it develops. Because remember, this 5-minute time slice just started. So we have 5 minutes now to see what this looks like. So it's red right now. So what's that telling you? It's red, meaning that right here, that was where this thing started, the open. Right now, that's as low as it's got. Now, you can't quite call that a close because it hasn't finished, but that is a current low, and it's going red right now, meaning the price is dropping. And please realize that what I've just told you is not, you're not a candlestick expert after what I just explained to you. I'm just hoping to convince you and to persuade you that, oh wow, yeah, candlestick compared to a line chart, you're definitely getting more information from that candlestick chart. And as I would argue, the more information you have, the more informed you can be. The more informed you can be, the better trade plans you can put together, and the better trade plans you can put together, the higher likelihood you have of actually making money. So if you have any other questions, please leave those down below. But yes, please, as a beginner, just realize that you're lacking so much information by choosing to use the line chart, and you're not dumb for doing so. I remember being a beginner, and I use the line chart. I have a podcast. I've talked to many people, and we go over their journey. And so many people have said, "Oh yeah, I used to use the line chart." So you're not dumb. Again, full credit. I'm glad you're using the King indicator, which is price action. But as you just saw here, you can get so much more information about the price just by converting from line chart to a candlestick chart. So I hope this helps. Like I said, if there's any questions, leave those down below. But yes, please stop using the line chart. Start using candlesticks. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.